migas loh. Terus kalian juga bisa foto di sini juga. Ini salah satu contoh dari 3D art pemigasan. Nah, yang ada di belakang saya ini, terus yang di sebelah sana juga kalian bisa langsung foto-foto loh, dan ini pasti seru. Sekarang kita lihat yuk wahana terfavorit di MC Edupa. Ya, inilah waterboom. Lihatlah rekan migas, sangat jernih airnya. Pengen cepet-cepet berenang ya. Seluncurannya juga loh. Ada yang untuk anak-anak dan juga untuk dewasa. Dan wajib dicoba suguhan makanan dari Wisma Sukong Maju Resto yang akan memanjakan lidah rekan migas semua loh. Resto ini juga dihiasi diorama tentang sejarah migas loh. Contohnya seperti yang ada di belakang saya ini. Wahana-wahana lainnya yang rekan migas wajib coba adalah ATV ini yang sedang saya pakai. Dilengkapi dengan mini zoo. Nah, keren kan dan seru kan rekan migas? Jangan lupa mampir ke Migas Cipu Edupark ya.
Menempati area seluas 130 hektar, kami berada di Kota Minyak Cepu, Kabupaten Blora, Jawa Tengah. Kami adalah pusat pengembangan sumber daya manusia minyak dan gas bumi di bawah Kementerian Energi dan Sumber Daya Mineral. Hadir untuk memberikan pelayanan jasa diklat, sertifikasi, jasa teknologi dan jasa keahlian di industri migas. Menempati area seluas halaman yang berdiri sejak tahun 1966 dengan mengacu pada standar kompetensi kerja nasional Indonesia, lingkup diklat meliputi bidang hulu, bidang hilir, dan penunjang. Diklat dilaksanakan dalam bentuk pembelajaran di kelas, praktek, kunjungan lapangan, serta on-the-job training. Di sini, program diklat dapat didesain sesuai kebutuhan perusahaan Anda. Melalui lembaga sertifikasi profesi kami, LSP PPT Migas, kompetensi dan kualitas tenaga kerja terjamin dan terpercaya. Pengakuan serta keberterimaan secara nasional dan internasional menjadi bukti profesionalitas kami. Kami juga melaksanakan pelayanan jasa teknologi, antara lain jasa pengolahan minyak bumi, jasa laboratorium, jasa bengkel dan kalibrasi, serta pelayanan jasa keahlian. Jasa pelayanan kami didukung dengan sarana dan prasarana yang lengkap. Mutu dan kualitas pelayanan jasa kami terjamin. Kami berdedikasi menjadi mitra kerja yang unggul, handal, dan terpercaya. Bridging your success.
Sukses itu hijrah dari keterpurukan. Menjadi manfaat bagi sesama, memberikan contoh untuk keluarga. Tangis bukanlah identitas kita. Sukses itu berusaha sekuat tenaga, tidak mudah putus asa, selalu sehat dan bahagia. Dan selalu berdoa kepadanya. Sukses itu bekerja dengan baik. Tidak ada perjuangan yang sia-sia. Menerapkan segala ilmu yang diraih dengan tekad kuat, yang tak kenal lelah panjang masa.
Sukses itu adalah dengan memberi yang terbaik, melayani dengan sepenuh hati, membantu mewujudkan mimpi, masa depan yang lebih baik bagi keluarga dan negeri. Kebahagiaan itu adalah selesai tanpa ditunda. Dan tidak ada kata terlambat untuk membuat sesuatu yang lebih berguna demi kesuksesan kita semua. Untuk informasi lebih lanjut, kunjungi kami di PPSDM Migas Bridging Your Success. Seperti apa pembelajaran online yang sedang berlangsung?
Kelemahannya memang di penggeraknya ini, peralatan-peralatan yang ada operasi
untuk menjadi komunikasi efektif.
Sekarang aku sedang ada di MC Edupark atau bisa disebut dengan Migas Cepu Edupark. Dibangun di atas lahan seluas 11.000 meter persegi dan berlokasi di Jalan Golok Ngajo, Kecamatan Cepu. MC ini adalah inovasi dari PPSDM Migas yang telah dibuka pada tanggal 31 Maret 2019. Di sini rekan migas akan dimanjakan dengan wahana edukasi dan wisata kemigasan untuk semua lapisan masyarakat loh. Nah, sekarang yuk ikutin aku untuk melihat apa aja sih yang ada di Edupark ini. di sini juga ada peralatan-peralatan yang biasa digunakan di industri migas loh. Terus kalian juga bisa foto di sini juga. Ini salah satu contoh dari 3D art pemigasan. Nah, yang ada di belakang saya ini, terus yang di sebelah sana juga kalian bisa langsung foto-foto loh, dan ini pasti seru. Sekarang kita lihat yuk wahana terfavorit di MC Edupa. Ya, inilah waterboom. Lihatlah rekan migas, sangat jernih airnya. Pengen cepet-cepet berenang ya. Seluncurannya juga loh. Ada yang untuk anak-anak dan juga untuk dewasa. Dan wajib dicoba suguhan makanan dari Wisma Sukong Maju Resto yang akan memanjakan lidah rekan migas semua loh. Resto ini juga dihiasi diorama tentang sejarah migas loh. Contohnya seperti yang ada di belakang saya ini. Coba adalah ATV ini yang sedang saya pakai, dilengkapi dengan mini zoo. Nah, keren kan dan seru kan rekan migas?
Okay. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, everyone.
Hai rekan migas, everywhere joining this Zoom meeting and watching on YouTube PPSDM Migas Official and Kementerian ESDM. Gimana kabar hari ini? It is a pleasure for us to welcome you to this webinar.
Navigating the Perfect Storm, Implications for Indonesia.
I'm Santi Octaviani.
And I'm Nova Fauzia. COVID-19 has been a great concern for everyone lately. It has given a tremendous impact across all sectors, tidak terkecuali industri migas.
Seperti kita ketahui bahwa migas masih menjadi sumber energi dan sumber pendapatan utama di Indonesia.
Tapi nih Kak Santi, beberapa waktu ini kita sering dengar bahwa harga migas itu turun tajam.
That's right.
Jadi COVID has resulted in low demands for oil and gas combined with the already low oil prices.
So, will oil and gas industry lose its charm among the investors? Dan bagaimana kelanjutan pengembangan industri migas ke depan? Termasuk bagaimana rencana pengembangan sumber daya manusia migas ke depannya.
But don't worry, because your questions will be answered in this webinar. We will discuss the impacts of oil price crisis and the COVID-19 pandemics in oil and gas industry and its implication toward human resources development.
Bicara tentang pengembangan SDM migas, pasti ingat PPSDM migas.
Pastinya lah.
PPSDM migas is the center for developing your skills in oil and gas industry subsector.
Dan kita mau ingetin buat rekan migas bahwa starting from Monday, jadi besok Senin, we will reopen our offline training and certification classes in Cepu. But I would like to remind you that you need to consider on the health protocols.
And for those of you who wants to join our online trainings, workshops, and certification, maybe all of you may be worried about traveling, please check our website on ppsdmigas.id and follow our official social media, Instagram, Twitter, Facebook, and YouTube.
As a trusted human resources development center of oil and gas, PPSDM Migas has been accredited by Komite Akreditasi Nasional or KAN for Integrated Management System.
There's even more.
What
LSP
else?
PPSDM Migas adalah satu-satunya LSP milik pemerintah yang bergerak di subsektor migas, yang tidak hanya terlisensi oleh BNSP, but we also accredited by Komite Akreditasi Nasional melalui ISO 17024. So, please do not hesitate because our certificates are both nationally and internationally accepted. It is trusted.
Okay, well, let us greet our speaker and presenters for today. Yang terhormat, Kepala Pusat Pengembangan Sumber Daya Manusia Minyak dan Gas Bumi, Bapak Wahid Hasim. Selamat sore, Pak Wahid.
Sore.
Bagaimana kabarnya, Pak?
Baik, Mbak.
Okay.
And the Honorable, today's moderator, Bapak Florentinus Suryo Susilo, the Senior Advisor of Arthur the Little Southeast Asia, and our presenters, Mr. Stephen Rogers, partner at Arthur the Little UK Energy and Utilities Practice, and Mr. Tung Gi, Head of Arthur the Little Energy and Utilities Asia Pacific. We are very happy to have you here, and we are overwhelmed to see you in this webinar.
You know what? Up to 2,000 people have registered in this webinar since we published it in our social media 2 days ago. Can you believe it?
Wow, and the participants here come from various parts, from oil and gas industries, government officials, universities, and those who take great interest in our topic today.
And I would like to inform you that for those of you who find any problems in joining the Zoom meeting, you may also watch it live on our YouTube channel, PPSD Migas Official, or from the YouTube channel of Kementerian ESDM.
Before we start, let us pray first. Bapak Nur Halim akan memimpin doa. Disilahkan. Assalamualaikum warahmatullahi wabarakatuh.
Ya Tuhan kami, puji dan syukur kami panjatkan kehadirat-Mu atas limpahan nikmat. Assalamualaikum warahmatullahi wabarakatuh.
Okay, let's continue. As the head of PPSD Migas, Bapak Wahid Hashim will be delivering the keynote speech. Pak Wahid, disilahkan.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Prosperous greeting for all of us and good afternoon. The Honorable Mr. Trangsi, Head of Arthur D. Little Energy and Utilities Asia Pacific. Mr. Stephen Rogers, Partner at Arthur D. Little UK Energy and Utilities. Mr. Florentinus Suryo Susilo, Senior Advisor Arthur D. Little Southeast Asia. All participants of webinar on navigating the perfect storm, implication for Indonesia in this Zoom meeting, and all audience watching on YouTube PPSDM Migas Official and YouTube Kementerian SDM. I feel greatly honored to be here with you this afternoon, even in one of the agenda of sharing the update on the recent situation, especially oil and gas industry as the effect of the pandemic. I would like to extend our thankfulness to Arthur D. Little for the care and the cooperation so we can collaborate to organize this webinar hosted by PPSDM Migas. We do hope that this cooperation could be continued and may result in more intensive activity in the future. Ladies and gentlemen, The global oil and gas industry has been hit extremely hard by the COVID-19 pandemic. Indonesia is one of many countries experiencing major changes to their social and economic structure due to the pandemic. People have been forced to aggressively minimize social interaction in an attempt to prevent the spread of the virus. Inevitably, these measures will have a major impact on various business sectors. One of the sectors in Indonesia that has been forced to adapt to this unique situation is the oil and gas subsector. Indonesia is home to numerous oil and gas fields, and upstream oil and gas activities are integral to the country's economic growth. Oil and gas activities are generally considered essential activities by government and have been mostly exempt from the lockdown measures. In addition, the collapse in fuel demand caused by the pandemic means countries across the global sought rating decision to let energy companies extract oil and gas. It is as a result of the reduction in road transport and air travel. It will not recover quickly, if ever, to the path it was on before the pandemic hit. Ladies and gentlemen, the government of Indonesia recently began the process of removing social distancing restrictions subject to various health protocols. This process of moving past social distancing and returning to workplace, school, and public activities is referred to as the new normal. Some options of future trend are being prepared and visible. What I would like to highlight is about what we can do to face the situation and its effect in our life in order to survive and optimize our potential. We have precious duties and responsibility for this. The equal important thing are the commitment, consistency, and seriousness in doing everything by determining our health for our beloved one. Besides, we also have to constantly maintain our competencies and professionalism that will be the result of our performance during and after the storm. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Terima kasih Pak Wahid Hasim. Sekarang kita sapa dulu rekan migas yang masih tetap stay tune baik melalui Zoom, YouTube channel Kementerian ESDM dan juga YouTube channel PPSDM Migas Official. Masih tetap semangat dan jangan lupa subscribe ya. I would like to remind you all about safety. So, selama mengikuti webinar ini, jangan lupa tetap memperhatikan tentang keselamatan, yaitu dengan memilih lokasi yang aman untuk mengikuti webinar ini. Dan juga manage untuk sound level dan juga untuk fokus rekan migas semua. Jadi, tetap bisa tanggap dengan cepat if there is any emergency situation. Serta tidak disarankan ya untuk mengikuti webinar ini sambil menyetir karena berbahaya banget. Betul.
Okay, before we get started, let me inform you the rules of this webinar. To all participants, please make sure to mute your microphone, turn off your camera, and set your Zoom account name according to your real identity. Kenapa? Karena nama yang Anda gunakan akan digunakan sebagai data di e-certificate nantinya.
And if you want to raise a question, please submit it through the Q&A menu below your Zoom account. And also for those who join this webinar through YouTube channel, please put your comments in the chat section in YouTube. And we will have question and answer session later.
Okay, I think we're ready to start this webinar.
Okay, let's start the webinar.
Navigating the Perfect Storm, Implications for Indonesia.
And I would like to invite Bapak Florentinus Suryo Susilo to moderate the discussion. Bapak Florentinus, would you please? Thank you.
Oke, terima kasih Bu Santi. Selamat sore Bapak Ibu sekalian. Salam sehat buat kita semua. Terima kasih kepada Kementerian ESDM dan PPSDM yang telah memberikan kesempatan kepada kami untuk sharing knowledge tentang update dari oil and gas. Before we start the discussion, I would like to greeting to the speaker. Good morning to our speaker from Melbourne, Australia, Trangi. Good morning. Good evening, yeah. Good evening. Hi.
Okay, Floyd. Thanks, everyone.
Hi. And then I would like to greeting also to our speaker from London, UK. Good morning to Stephen Rogers.
Good morning, sir. It's a bright good morning here.
Okay. Now, before we start the discussion, I would like to introduce about Arthur De Little and also about the speakers. Okay, just ensuring everybody can see the slides. Can you see the slide?
Yeah, thanks, Floyd.
All right. Okay, so here we are. I would like to ask you a couple of minutes to introduce you about the history of Arthur De Little. This is very important. Why very important? Because we're talking about the credibility of the analysis and the credibility of the who are we, the one that's sharing for the discussion today. Arthur De Little was founded in 1886. So Arthur ADL is the world's first strategy consulting firm. It was established in 1886 in Boston by Professor Arthur Deon Little, so from MIT. And then afterward is that you can see in the slide that a couple years later, there was establishment of a Bose & Co. Bose & Co. Later now is acquired by PwC. And then afterwards, a couple years later, there was establishment of McKinsey & Company, and then continue with Ethic Kearney and then BCG. So BCG is something that's very interesting because BCG, Boston Consulting Group, was spin-off from Arthur De Little. So because the founder of BCG, Mr. Bruce Harrison, was the consultant from Arthur De Little. So BCG is actually like a child of Arthur De Little. And then afterward, there was spin-off from BGC to become a Bain & Company. So it's like a Bain is like the grandchild of Arthur De Little. As the company that already over 130 years in the business, Arthur De Little had a lot of experience in advising the business around the world. Like for instance, is that in 1966, ADL has helped to setting up OPEC. By the way, just for your information, that I had a discussion today with the governor of OPEC from period 2015-2016, Bapak Dr. Widyawan Prawira Atmaja, and actually he planned to join as well in this webinar. So, but I don't know eventually if we have a time, but I had a discussion that he planned to, he's very interested with the topic that will be bring by Arthur De Little. And then afterward is that, like for instance, and you can see in the scan that in 2017, there was an event, quite big event in the Middle East, that restructuring of oil and gas sector in one of the Middle East countries. So the one that doing it is Mr. Trangino with us. And then in 2019, which is last year, there was also the big project about technology foresight and roadmap strategy for one of Southeast Asia oil and gas company, and this is Trung doing it. So this is just like a brief overview, and then this is just for your information that Arthur D. Little currently presents in more than 40 offices around the world. You can see the portfolio of the Arthur D. Little. Saat ini di Jakarta kebetulan belum ada entity-nya in Indonesia. Jadi di Indonesia saat ini menginduk di Southeast Asia di Singapura ya. Jadi kebetulan kalau untuk Indonesia saat ini saya perwakilannya kebetulan. Dan if we talking about the what we done in Southeast Asia, Arthur D. Little has served more than 100 clients in Southeast Asia. So like for instance, in Indonesia, we already contributed to serve some company like Pertamina, for instance, Indosat, Angkasa Pura, and also Garuda, and also another big company as well. And in Southeast Asia, you can find that the DBS, Temasek Holdings, and then Petronas, Petronas in Malaysia, in Thailand, in Philippines, there are many big projects. So what we are doing, what Arthur Little deliver is in relate with the strategy, economic and organization, and then technology, innovation management, and operation management. So this is a brief overview about Arthur D. Little, just for your understanding. And then now I would like to introduce to the speaker, Mr. Trangi, as it was introduced by MC that Trung is now head of energy and utilities for Asia Pacific of Arthur D. Little Southeast Asia. Trung has more than 20 years experiences in the oil and gas industry. So his area now including Middle East, and then Australasia, Southeast Asia, and also Indonesia, of course, including the organizational restructuring, and then growth strategy, diversification strategy, technology, digital strategy, hydrocarbon maturation, and operational excellence. Before joining with ADL, Trung worked with the Schlumberger Business Consulting, and then also with Halliburton. So it's quite tremendous experiences. Education, Trung holds MBA from Melbourne Business School, and he also has a mechanical and space engineering degree at University of Queensland, Australia. And then the second speaker, Mr. Stephen Rogers, is the partner of Global Energy and Utility Practice, a very high experience and one of the reference if many people talking about the technical thing in oil and gas, like a PSC, for instance, PSC, and then growth split, something like this. A very, very, very high experience. Already in business more than 40 years, including with some of experiences in the company. His consulting focus was in the subsurface, geotechnical strategy, due diligence, and many things and related with the strategy. And he already served many big clients around the world, including Quiet Energy, Saudi Aramco, Zatco Offshore, and various clients at Syria, Italy, Argentina, Colombia, Kazakhstan, and Georgia, Albania. So he, prior to Arthur D. Little, Mr. Stephens has about 25-year experiences in oil and gas exploration and development program, offshore operation like in BP, has and TXU in North Sea and United States. Education, Mr. Stephens holds the Master of Art in Earth Sciences from Oxford University, a very famous university, and also MBA in INSEAD Paris. Again, it's very famous university. Now, without further introduction, I would like to offer to Stephen and Trung. Trung and Stephen, you have 50 minutes combined to do the presentation. Afterward, we will discuss in a Q&A session. Please.
So, Let me just share the screen if I can.
Very good.
Okay, there you go.
Right, do you want to maximize that? That's fantastic. Thank you, Trung.
Yeah.
Do you want to flick forward until we get to the right point? Great, very good. Thank you very much, everybody, and and thank you for the introductions. As was indicated, I'm a geologist by background, and have had a good range of experience over the last 40 years. But I have to say that this particular wave, this particular cycle in the oil and gas industry certainly feels different to many of the others that we've seen over the last 30 or 40 years. Now, yes, this is largely the result of COVID-19 and the collapse in demand that we've seen as a result of the economic impact that this pandemic has had on most of the world's economies at the same time. Now, if we look back to the recession that we saw 10 years ago, the what's labeled here the Great Recession of 2008-2009, while this had about a 3% impact on GDP in the advanced economies, in global terms, it didn't have much impact overall on the world as a whole. That, of course, contrasts with the impact of the Depression in the early 30s in the US, where the impact year on year for 3 or 4 years was averaged about 10%, which is catastrophic at the time. But nevertheless, the impact that we're seeing in the advanced economies during 2020 is estimated by the IMF to be 6%, less so in the emerging economies, but a drop in economic output of 3% that we can see in the world overall is still very, very dramatic. And as a result, it's seeing very dramatic impacts on the consumption of energy. Next slide, Trung, if you could, please. Over on the left, you can see the IMF's prediction of a 6% overall drop in global GDP for the year as a whole in 2020. And that's despite the fact that there's going to be undoubtedly the implementation of quantitative easing and many additional measures to mitigate the crisis. And I think here we should all give a vote of thanks to the economists around the world that have developed these tools, such as quantitative easing, to mitigate the very real economic hardship that this is causing so many individuals and so many businesses around the world. This is not, of course, to offset the personal tragedies that COVID is causing to hundreds of thousands of people around the world that are that provide the backdrop to this industry collapse. And I think we should all give a private moment of reflection and about this personal tragedies that underlie these very stark figures. Nevertheless, what you can see over on the right-hand side are the trends in overall energy demand, highlighting that 6% anticipated energy collapse during 2020, the largest drop since the end of the Second World War in the 40s. And that assumes a relatively cautious opening up of the world economies towards the end of the year, a cautious recovery from the lockdown that we've seen in so many economies over the last 3 or 4 months. Trung, if you could flick forward, thank you. And that lockdown, of course, has been the result of the explosion of COVID-19 cases in so many geographies around the world at the same time. In the Americas, of course, that explosion, an almost uncontrolled explosion in North America and South America, that explosion in cases is still carrying on with very with very weak understanding and political control of the abilities to constrain it. In Asia and in Europe, of course, that pandemic has been brought more effectively under control. And we'll have a look at the differences there in the next slide, Trong. We can see, for example, that China, which is one of the earliest countries to suffer from the pandemic, that the number of cases was brought very early on into good control, as it was in South Korea, after a slightly later peak in Japan, Europe collectively at a much higher rate of penetration. The cases now have been brought under control, albeit 3 or 4 months later. In the United States, not so much. Here, there's a steady rate of new cases of 30,000 a day of new COVID cases, with very little sign of any social measures or other measures to bring it under control. And there's obviously some detail there on the right about what those cases are. In Southeast Asia, the impact has been much less severe. In Thailand, much more effectively brought under control. Malaysia, Singapore, Indonesia, perhaps a slightly worrying increase, but in overall terms, Southeast Asia much less affected than other parts of the world. Next slide, Strong. But of course, if we look worldwide, and this is just looking at the European stock markets, if we look worldwide, then that drop in demand, the 6% drop in energy demand, has had a very severe impact on industry, manufacturing. If we look at automotive and manufacturing, a catastrophic drop between the 25th of April and the March the 20th in stock market values, in transport and travel and transportation, similarly a steep collapse. Whereas perhaps healthcare, consumer goods, technology, telecoms, even utilities have seen a much lower level of increase. Indeed, some of these colors, some of these industries highlighted in green here have actually seen increases. Some of these industries have responded to the economic impact of the COVID crisis by providing the services and the products that are necessary and have actually shown growth. Oil and gas, however, is the one that we are critically interested in, and it's the one sector that has shown the most impact, that has suffered the most, and it's the one that we really need to understand where it's going, what's happened to it. Next slide, please. What is it that's caused this very strong impact in stock market values, and of course the strong reduction in free cash flows and earnings outlook that underpins that? Well, yes, it's the demand. We've seen the demand in the reduction in demand in the first half of the year, and the projected continuation of that demand reduction over the next 3, 6, 9 months potentially. Indeed, most projections indicate that it's going to take years before demand recovers to its 2019 levels. And that is going to depend on the extent to which it is able to displace the continuing encroachment from alternative wind and solar renewable energies. But at the same time that demand was reducing, of course, there was an encroaching and continuing oversupply. Yes, that's partly because production was continuing at the same level, but also partly because of a price war, a supply war between Russia and Saudi Arabia that emerged at the same time. And so we'll come on to look at that later. The result of all of this was a strong drop in crude prices, resulting in low and in some cases negative margins for some operations, both production and on the downstream refining side, with the result that many operations couldn't actually cover their costs. There's not enough crude storage to store the crude that is being produced, and in particular, oil field services have been the first areas of the sector, the first areas of the business to be impacted. That's a very important issue. Try the next slide, thank you. And here's the time sequence that you can observe from $70 a barrel, quite comfortable in January, and then the first signs, the first indications that the infection is starting to bite in February, and then in March, still at oil prices of around $60 a barrel, but it's not then until the Russians declare war on the Saudis by pumping oil into the market to claim market share at the wholesale level for crude, that the wheels really start to fall off the wagon, and awareness of the sensitivity of the supply-demand balance to this growing COVID-19 demand change really starts to bite. And through the middle part of March, you can really start to see prices drop as demand changes, the supply-demand balance changes such that prices drop 72% by the end of March, the early part of April. Yes, we've seen some recovery as demand has recovered, but only to the levels of up to about $35, $40 a barrel. Next slide, please. And the only reason that recovery has taken place is because of recovery and holding back production by the OPEC and the OPEC plus countries who've got together to have a rolling, tapered series of production cuts over the next year, 9.7 million a day over the next few months, reducing over the next couple of years, which will hopefully bring supply and demand back into balance. Next slide, thank you, Trump. And you can see the importance of that balance on this slide, where yes, there's sometimes over the last 3, 4, 5 years, there's month to month, quarter to quarter been a slight excess and a slight deficit in global supply, maybe somewhere between up to 1.5 million barrels per day, depending on the time of year. And this is the normal amount that can be coped with through the standard level of storage that's present at refineries and at the major transit points on the network. But when the wheels start to fall off, as they did at the beginning part of this year, the surplus in the system becomes at such a high level, 5, 6, 16 levels of 16 million barrels a day of excess capacity, that the innate flexibility in the system can't cope. And it's for that reason that the prices were forced into a negative position, albeit briefly as a result of a technical change. So yes, there has been a restoration back to normal, something a little bit more like normal levels of price and supply in the most recent quarter down here at the far right. But unless OPEC and the OPEC plus countries maintain their constraint, and it will be very easy for that to flip backwards to the situation that we saw in March. Again, next, thank you, Trump. The result of all of this chaos in the market and the nervousness that many companies are feeling about the likely future outlook for 2021, 2022, is that E&P companies, the upstream companies, have absolutely slashed their capital expenditure program for the next couple of years to prepare for the worst case. Now, all sorts of companies have been doing this, and you can see the impact, whether it's for national oil companies who've made major reductions. Some of the majors, the international oil companies, have also had similar levels of reduction. The shale companies in North America have made massive changes given their relatively small size, as have the independents. Canadian companies all have made, on average, about a 30% reduction in capital spend. And it's likely that more change will happen. We haven't had any indication yet from some of the Middle Eastern companies. We haven't had any indication yet from some of the Russian companies. Almost certainly we will see further capital spend reduction from them too. Next slide. Thank you, Trump. One of the bigger changes, in particular, one of the bigger changes that we have to reflect on today is how the sector will change after the crisis, in terms of talent, in terms of manpower, and the digital training in particular. I don't want to dwell on this now. I think this is something that Trung will come back to. But if we reflect on the history of the industry, we're now at an inflection point where many of the people who came into the industry in the 60s and 70s and 80s are now effectively leaving the industry through retirement or for other reasons. And particularly given the layoffs that we're seeing this year globally, whereas in the past there's been a lot of talent in the industry, we're now seeing a challenge as to who in the sector, and this isn't uniform, of course, doesn't apply to every jurisdiction, but who in the industry will be leading forward the new set of growth, the new range in the years to come, whatever the industry looks like when it has recovered. Next slide, thank you. So what is that recovery, and what will companies look like after this perfect storm has passed? Well, the long-term trend, of course, is for the energy transition to continue. Most companies, of course, are undergoing this transition to a lower carbon, electricity-rich value chain position. And certainly most of the European majors, the international companies, are following this quite aggressively, quite continuously. And we're also seeing a portfolio shift to gas in many companies, and we've noticed that not only in North America, but in many parts of the world. But we'll see in the shorter term, however, before we get to this long-term position, we'll see extensive project cancellation. We'll see reduced new reserves additions with reductions in exploration, reductions in organic reserves growth. We'll see bankruptcies worldwide, certainly from many of the smaller, perhaps the larger companies, and restructuring, and quite active asset portfolio restructuring as companies sell a bit of this, buy a little bit of that, to reshape themselves for the long-term future that they observe. Next slide, thank you. And how they get to this long-term future will, of course, depend on the nature of the oil price projection, the oil price progression that we see. We might, of course, see quite a sharp bounce back, a V-shaped recovery to a nice high oil price again, with the IOCs refocusing on shareholder returns and many of the delayed projects restarting. Perhaps more likely is a stagnation to rather lower oil prices with more of an L-shaped recovery. And in that example, in that scenario, the industry will probably end up being a little bit smaller. There'll be a focus on lower costs. There'll be strong transformation from by the international oil companies, with many of the mothballed projects simply being cancelled. If we look at an oversupply being much longer term, then of course damage to the sector will be much more severe. Chain shutdowns of high cost of production, more dramatic levels of E&P capex, and even if there's more of a bounce back to slightly higher levels of oil price, we'll still see many major projects shut down, and a much quicker transition of many of the international companies to an energy transition, an energy renewable energy perspective. Next slide, thank you. So yeah, this is just a restating of that original position. Yes, all companies are going to have to get smarter, by which I mean reducing costs through introduction of digitalization, AI, machine learning, and automatized processes. Yes, they'll become gassier. Yes, they'll become they'll need to introduce more renewables in their portfolio, as well as reducing emissions, and as well as having less CO2 in their products and in their output. But they'll have to have a shorter reserves life. They'll have to have a more agile response. They'll have to develop lower cost positions, and they'll have to realign their portfolios to give more rapid return of cash to their owners, whether they be national governments or to shareholders. Next slide. And this is simply the summary of that. I think we can skip over this slide, just so we can get to the end of that section before introducing Trung to talk about the particular implications for Indonesia.
Thanks, Stephen. So let me go through this next chapter where we talk about the implications for Indonesia. We have here 5 implications that I'd like to share with you. Each of them will take us into different parts of the oil and gas sector or the energy sector. The first is about managing disruption from the oil and gas volatility. Next is about how to improve attractiveness for foreign investments into the sector. Human capital that we heard a lot about and have spoken earlier on. Sustainability, revisiting the renewable energy space. And last but not least is the digital pilots and how do we scale that up. So if I take through to number 1, we've seen in the past, even the last 2 weeks, oil price anticipation, forecasting. A number of analysts have shared with us their views, and it's quite wide depending on the various scenarios that they use. Here you'll see that we don't have a crystal ball, and it's quite unpredictable at times, depending on the external and internal implications. So for us, we've been trying to consult our clients to really now to rethink their the strategy, their visions, to understand what does it look, not just at the 5-year, 7-year time frame, but the 10, 15-year longer horizon. Obviously, the further out we go, the more uncertainty that would look like. Nevertheless, it's still the first step to think about. Scenario planning is quite important for some of our clients in the Middle East. We're looking at a 50-year time horizon for their scenarios, whether it be in mobility and healthcare. We're trying to map out what could be the possibility. Same thing for oil and gas or the energy sector. We should be doing the same thing. Last but not least is, once you have that, what would the playbook look like for different scenarios? And taking that step further is, how could we use digital and AI for us to anticipate the external news that may come into play? Looking at the playbook, we've tried to map out what that may look like for you in the oil and gas sector, depending on the various external factors, the impact, the decision points, and key strategic actions. If we look through, the scenario points, we should be able to quickly understand what are the decision areas to take, whether it be in the human factors or the supply chain or the asset management. All that will have key actions for us to take as our playbook. Just an example of something we've done in the past for a major OFS player, we looked at how to anticipate, and I'm not here to forecast the price, but anticipate an upward or downward trend using a number of leading key indicators. This is something that your firms or your organization should be able to do. And then through that, understand how they interact with the sector, monitor that as we go along for the short, medium, and long term, as far as you can. Obviously, with the longer term it is, the uncertainty will be higher. And from there, we're able to develop through these various scenarios certain key actions and decision points for the management team. This is here what I meant by managing and understanding the volatility of our sector. It can be done even though we've had a lot of different analyst viewpoints on where the oil price may be. But what you really need to think about is what is the trends as you go into the 3, 6, 9, 12 months time frame. If we look at foreign investments to attract into the E&P space for Indonesia, it is quite important for us to think about this. How do we see our energy consumption versus our production? Here on this map on the left-hand side, you can see that consumption is already and will continue to outpace the production that we have in country. This, if you look on the right-hand side on the investments, it has dropped since the last crisis, and we're now trying to understand, where we're heading towards to ensure that we do produce a lot more for what we have. There is, if we plot out the number of years going forward from to date in 2020 and the next decade or so, there will be some sort of shortfall both in oil and gas based on the 2030 targets. What would that mean for our sector, and how as our ecosystem from regulatories to national oil companies to our service providers, how does that affect us, and what do we need to do to ensure that this gap can be minimized and therefore the security of the oil and gas production for Indonesia? We'll need to obviously understand the introduction of the growth split. It's been now a few years. It was there to reinvigorate the participation, promote efficiency, more or less trying to bring in skin to the game. We've compared to many other product sharing or even service contracts in the past, and not one will fit everyone. And so what you have done to introduce a growth split is quite nice and fair. But now it's time to see whether are there any further challenges, ambiguities, and how do we manage that? These are the key questions that I propose that we understand a bit more. Is how could there be more transparencies for regulatory regimes, businesses, for the contractors? Are we able to try and leverage more of the national oil companies to reinvigorate the development of oil and gas sector? The best practices around the world, what do they look like, and how do we try to adopt some of these things to Indonesia? As Flo has mentioned earlier on, a couple of years ago, we looked at a restructuring for one of the Middle East nations for the oil and gas sector. And here we looked at what does the regulatory look like, what's their responsibilities versus what should the national oil company be. We then looked at the holding company itself and whether there needs to be some sort of restructure, the fiscal regimes also, in terms of how could we attract more players to come in. So there was a number of different things that we had looked at. It's in stages of implementation. Indonesia has been producing oil and gas for a number of 50, 60, even more than that years. And so it's probably a good time to think about how the PSC and the GPSC is faring to date. Developing human capital, we see that quite a lot, not just in Indonesia, but across the other parts of the world. Here, if we just focus on Indonesia itself, the last 5 years, in 2015, we see the IOCs, the Indonesian EMPs, and various other small players from the Japanese, the Chinese coming through. In 10 years, in another 5 years' time, in 2025, we see a change in the landscape. Less of the IOCs will be participating based on the current data, more through to the Indonesian players, which then forces us to think, how do we then anticipate, if we already have a gap in our oil and gas production, to more focus on Indonesian E&P players to fill these gaps. And the third is, if we cannot in the short term, how do we attract talent or foreign investments to help us with this? If we compare that in the oil and gas sector globally, from 2010 to 2015 to last year, the interest or the number of young people that want to join the oil and gas is less and less appealing. We're seeing a lot more retirees, and within the middle here, less experience are coming through. This here is not just for Indonesia, but it's more global. If we look at the ranking of the oil and gas sector, has declined as an attractiveness for graduates to come through. So then what does that really mean for us, not just Indonesia, but as a global sense? I propose that we may need to think about new and innovative ways to adopt and build capabilities. Yes, we can go through the whole traditional ways of recruiting from best schools and so forth, but is that the only way? Here I propose that we can look at what other younger generations of this world are looking at. And if you look at a lot of statistics, we're seeing a lot of startups, entrepreneurs. So we need to almost think about how do we include these next generation of leaders into our sector. Focus on the innovation technologies and digital space to enable efficiencies. There's now, potentially a look at shifting from marketing or recruiting as big oil to big energy as we think about the trends, the mega trends from hydrocarbons to renewables. And as we heard Stephen mentioned about the acceleration of energy transition, would this be an attractive offer for our next generation? Opportunities for the leaders of the future. Diversification targets will probably need to be set a lot higher to ensure that we try to include other race, genders, types of different skill sets into our current talent pool. At the moment, if you look at the oil and gas sector, we're probably looking around about 8 to 10%, if that, of females. How can we do more to attract diversification here? Mentioned before about scholarship and partnerships, but here let's just think about how do we go beyond that to attract the strong candidates, not through the usual channels, but some of the companies are now looking further, into the high school education, not just for regionally, but globally as well. We've done a lot of work along this sector, this space, in terms of management of oil and gas futures leader, looking at curriculum for oil and gas companies, ministries. Sorry, I mentioned the fifth one already. So in that development side of things, there's a gap that we need to address. And I'd like to propose that as the regulator or the ecosystem within this webinar, how do we see ourselves attracting different types of talents and seeing how the next generations of employees may be attracted to oil and gas. The fourth part is the scale up of digital pilots. We've heard a lot about digitization across a number of companies in the last downturn, and it's been accelerated over the last few years. Here are the key stepping stone, I would say, to adopt, and we've seen these through our clients and also other peers of in your space. The strategy part, it's the very first that we have looked into identifying the business problems. Not all digital can be used in the space you're in, so we need to think about the various business problems, the assets, what they require, to then quickly move into the pilot stage, where we then try to go beyond the proof of concepts and institutionalize that within our firm. And last but not least, and if possible, to commercialize it, whether it be internally or externally. A lot of companies have succeeded in doing so. Some are going through their transformation, but it still takes quite a lot of effort. And if we don't go through the steps that I've mentioned over time, we may see the transformation fail. A lot of opportunities across the value chain in utilizing digital as an enabler. Here are just some of the examples through from exploration, development, production. And as you've already seen probably in your own organizations where they apply, some have gone through further in terms of applying AI, machine learning into their operations, into the corporations as well. The benefits of the digital pilot and scale up through the different phases ranges depending on where we apply and how much we apply. Here, the biggest part is through the development production side of things, whereby we'll see quite a large improvement in efficiency. The technology enablers, as we have seen already in some parts of the operations, through cloud-based edge computing, high-power computing. We're now looking at next generation of AI, machine learning, and obviously Internet of Things, connecting workforce, remote, and so forth. How does this really fit into your organization's ecosystem? Is something that I'd like to take back on the strategy of the firm, the support from regulatories, and the inclusion of the startups, innovation hubs that is popping up throughout the world, and hopefully we can create something in Indonesia as well to foster the next generation to participate in the oil and gas sector. As Flo had mentioned earlier on, we had done something recently for a Southeast Asian national oil company to look at their digital and technology strategy, foresighting on what is coming up in the next 5-10 years. And we're also looking at the convergence of other technologies used in sectors like healthcare, automotive, telco, to bring into the oil and gas space. As an example of preparing for the digitized environment, our team has looked into, for an IOC, how would field telecommunications can be set up to enable this digital enablement. Throughout the work we've done, we've identified a number of traps through implementing digital. We looked at the situation analysis, the experimentation, the scale out, and impact. And through that, there are these 5 key traps. Of course, there are more. Here we looked at where people tend to fail in is the over-analysis, running too many experiments, we tend to overcomplicate some of the implementation, the scale outs, and we try to pull out of the valley of death quite quickly to the implementation stage by looking at less of the digital space, but more on the human factor or the mindset. Then last but not least, one of the death traps here are the metrics, understanding which metrics to use so that we could anticipate what we could change and implement going forward. Some metrics may be too late to correct the course, and so understanding what KPIs or even key risk indicators is important. This slide I won't go through too much, but it ensures us to be successful. There are in each of these situations some enablers to look at. Here, if we look at thinking outside of our own industry, some things that perhaps, even for myself as a veteran of oil and gas for the last 20 years, we need to now think what could outside bring in, go beyond the traditional space, look at the show me, not tell me's, perhaps not so much of the big bang. Looking at moving away from the prototypes to the minimal viable product. We don't need to analyze to death the type of digital technology we need, but we need to keep on moving to beyond the proof of concepts. And then through the continuous measurement benefits, we'll need to look at how do we adapt this in not just technology, but the behavioral change and the change management we have to put through for the organization that we're implementing it. If I can then take a few more minutes to share with you the last point or the implications for Indonesia, the energy sector is about sustainability and renewable energy. Globally, we look at the energy weighting at the S&P 500. Over the last decade or so, it has dropped by about 8% from 11 to 5. This indicates that a lot of the investors are trying to look away from the oil and gas or traditional oil and gas sense, the hydrocarbon sense, more into a more sustainable future. And so is there a fear of investors moving away from what we do? And so as regulators and oil and gas ecosystem, we need to rethink of renewable energy or the new energy and the energy transition. Here, we look at the IRR for a typical energy project. And if we look at if the pre-oil price crisis at 2019 at a $6 per barrel, yes, at the pre-FID, we are quite attractive, IRR of 22%. To date, if we look at $35 per barrel, the return on investments is about 7%, which is more or less on par with some of the renewable projects, if not worse off. So there's a dilemma for us to think about, whether to decide to accelerate our renewables or energy transition, or do we hold back? Here, we've heard a lot, even from last night with Irina, discussing how renewable energy will be accelerated. Even as ADL, we believe that the acceleration will occur, and the governments will be supporting this as we move towards cleaner fuel. If we look at Indonesia, our target for the various stages and at 2050, and if we look at the solar and the different types of projects from hydro, geothermal, onshore wind, by 2050, we will see some gaps. What are the dilemmas or the trilemmas that we're seeing, and what we need to do to ensure that renewable or sustainability of cleaner energy is achieved in Indonesia, is to understand how tariffs, electricity, utility tariffs, energy subsidies, and whether our renewable target is realistic for us to meet. One other thing to think about when we look at the renewable space and sustainability is about social returns. A lot of studies have taken place in various organizations to understand what does it mean for us if we go into a country or into a different sector. What are the returns we get for social impact? Here, I wanted to just mention that we've done a lot of work here in regards to the analysis, and even from last night's debate from Irina, they were talking about if going into renewables, we'll be seeing about 30 to 50% increase in different types of jobs. In Australia, we're looking at renewable targets quite heavily and putting in a lot of stimulus from the government to support opportunities, reskilling capabilities, and moving towards growing the economy through the renewable space. So social returns on investment analysis is quite important for us to understand what is the impact of going towards this renewable space. What would be the types of initiatives you need to take in place to train and upskill your people in terms of job opportunities. So that really concludes the 5 implications for the Indonesian oil and gas sector. Let me just summarize quickly here is that first, we talk about managing disruptions. So we'll definitely be seeing another disruption coming through. Improving the attractiveness to support the production gap that we have in the future, fulfilling the human capital gap for the future leaders of the oil and gas sector, scaling up the digital space for efficiencies and productivity, and last but not least, to rethink whether we could accelerate, like many other nations, going into sustainability and the new energy transition space. Let me just hand you back to Stephen to close the discussion, and we can open up for Q&A after that.
Very good, thank you, Trung. I thought it would be useful, I noticed that we just have, I think 1 or 2 minutes left on the clock. I thought it would be useful to reflect on some of the issues that relate to, by way of closing the debate, closing the presentation, to reflect on issues that relate to the interface between the Indonesian nation and international investment. Obviously, the changes of the last 6 months have represented a profound shock in terms of price, allocation of capital by the international industry, and their intention and desire to invest, not in Indonesia particularly, but in any international upstream domain. And I was asked by a lawyer friend of mine quite recently, well, what does this mean in terms of where people are going to start to fall out? Where are the disputes going to happen? And what can countries do to make sure that they continue to attract capital so that they're, as they need it, to make sure that they are able to foster and develop their industries? Because clearly, if there's a shortage of investor capital, as Trung just illustrated, there increasingly is in the oil industry globally, then some countries, perhaps those that need that capital the most for their development, then some countries are going to be better placed to attract that capital than others. Now, there are going to be challenges in that. Certainly at the exploration stage, there are going to be some companies perhaps who try to back out of work program obligations because of staffing issues, poor economics, poor perspectives of future cash flows. And the question for the governments involved, therefore, is how to ensure that exploration activities are not delayed. I mean, apart from just enforcement, there is in fact an array of different negotiations, revisitations that could take place of non-profit related upfront taxes, things like land taxes, signature bonuses, field development plan approval bonuses, and bonuses, upfront monies of that sort, which can, the removal of which or the postponement of which can encourage companies who are perhaps at the margin wondering whether or not exploration in a particular domain on a particular block might be wise or not. Then again, there might also be challenges and disputes, debates at either the field development or field production stage. Companies may be wondering whether they should mothball a development halfway through, and in extremis, they might wonder whether it's actually worthwhile shutting in production. And they may demand a whole series of changes in fiscal terms, or maybe even just non-tax related incentives to continue with plans that in higher oil price circumstances they would have continued with. And the governments have to be able to identify what commercial policies, what legal strategies even are necessary to ensure that fields can keep producing, that developments can be maintained underway in the short term in response to these very often very real challenges from the government's concern. Sorry, from the companies concerned. Now, often those debates internally within the government and between the government and the companies involved are going to relate to the competition between countries in terms of the terms on their production sharing contracts that they offer foreign oil companies. So it's very important at times of inflection point in prices that governments understand where they rank country to country in terms of their ability, and they can calibrate where they stand in terms of their ability to attract capital. Are they one of the less attractive countries on a risked basis, or one of the more attractive countries on a risked basis? And there are quite subtle things that the ministries can do to attract acreage, to attract companies into investing in the country, even just at the margin on the licensing round stage, perhaps, rather than retaining, which we have seen in a couple of instances in Africa, rather than retaining all of the low-risk acreage for the national oil company, perhaps parceling some of that out to international investors to act as a sweetener to investment in other activities in the country. So there are a whole series of perspectives here, but I think it's important to bear in mind, it's not just about the broad scale issues. There are some smaller scale issues related to the management of individual pieces of acreage that are related to the international abilities to attract capital on the oil and gas assets involved. And with that, thank you very much. It's been a great privilege speaking with all of you today, and I think now I believe we're open for questions.
Yeah, thank you very much, Stephen and Trong, for a very good explanation. So there are many questions actually, but some of questions is actually a bit the same. So I combine some of the questions. So the first question is that this is like the summary of more than two questions. So how are other oil and gas regulators preparing for post-recovery? Yeah, that's the first question. And second is that what are national oil company and other local players should doing to manage this volatility? So this is the first two questions that maybe you can answer.
So
Steve, do you want to go for it? Yeah.
Yeah, the first question then is, what are the regulators doing to manage that volatility. I think at most national levels, there's very little they can do. I think there's they're battening down the hatches for what is certainly going to, in the Middle East, for example, there is undoubtedly going to be challenges in terms of meeting national budgets. In Russia, we're seeing the same. And the challenges there among all the national bodies has been to what extent do they dip into sovereign wealth funds? How do they control their expenditure, their social expenditures? But the only other levers that companies have to pull are those which relate, as I was talking on the last slide, those which relate to keeping the show on the road, keeping the investment going, attracting investment, making sure that not too much delay occurs in development, and persuading companies that all will be right, that they should continue with their investment program, they shouldn't shut in production, so that revenues can continue to flow through into the treasury.
All right, Trong?
Yeah, sorry, I just want to add here also, different regulators around the world will have its own different views, obviously. Now, with the COVID and the lockdowns, the situation we're in is slightly different to what we're used to in the past. And so Stephen rightly said that it's not that much more we can do as an oil and gas sector, but there are government initiatives that are, like I mentioned before, accelerating a lot of the new energy space, the topic on this, the topic on digitalization, the topic on new technology innovation. This will all help stimulate the growth of the economy and also to reach their objectives of providing new skilled workers, employment opportunities, as well as upskilling the nation for the future. So this is, in a sense, the government or regulatory side of things. In terms of the oil and gas players in the sector, we have seen how disruption of supply chain, impacted us, not just us, but also the other sectors due to the COVID and the lockdowns. So in that mind, how do we as a sector and the people in this webinar manage to provide local supply so that we can anticipate, so we can prevent the next disruption? It doesn't mean that we'll localize everything. It just means that we may need to set up key supply chains within Indonesia, or maybe perhaps within the region if there's a bubble or a hub. That way, we don't need to rely too much on, say, the likes of China or wherever else we're getting supplies from in the next, say, pandemic. So people are now talking about how do we localize our supply chain. So that would be something I'd mention to the audience.
All right. Okay, so just information to all the audiences that the question and the question Q&A session will be done until 5 o'clock. So I will choose some of the question that maybe considering to the time frame. So I will choose just selected question, but I promise that you can send an email to us, and then we can send give an answer through email. So the first another question is that this is from Mr. Hari Lumbantobing from Kemenaker, so the Ministry of Labor in Indonesia. So what do you think, to Mr. Stephen Rogers, what do you think about the opportunity for biodiesel as substitute fuel to become main fuel in Indonesia? What do you think about it?
Well, biodiesel is It's something that we've looked at several times in Europe, using lumber, using forests as a feedstock. This is Northern European larch, Scandinavian larch as a feedstock, and it's something which does have positive economics. It has positive economics, though, at $60 a barrel or north. Once you get down to $40 or $50 a barrel, in our experience, it wouldn't seem to be as viable. And we saw a number of projects that were being enthusiastically pursued during 2013, 2014, right across North America, right across Northern Europe, Northern and Central Europe, which came to a screeching halt in 2015 and 2016, simply because the price had dropped so steeply. Now, technology develops, technology matures, and perhaps that price threshold may drop slightly. I wouldn't say that it's something that would be top of the list for displacing renewable technologies, however, and by renewable I mean solar and wind technologies at the moment, at current prices.
All right. Okay, so another question is from Bapak Fauzi Hernanto. So he's questioning to both of you, why ADL predict that the oil price will take years to recover to the price of 2019? Is it because current oversupply trend in the market, or there is another reasons?
Well, if I could predict the oil price with any reliability, I wouldn't be here, and I would only have done so by accident. However, there is some logic behind our collective view, and I'm sure Trung will correct me or will interrupt. Why do we think prices will stay low? I think ultimately it's because of our belief, perhaps as a technology consulting company, that the trends for technological advancement in renewable energies have now got to a sufficiently advanced point, a tipping point, if you like, that the impact not on supply and the cost of supply, but on demand is progressively steeper and steeper. In other words, peak demand may already be with us. Yeah. Either this year or next year or the year after. And once you get to a progressively and continuously dropping demand, there's not a lot you can achieve in terms of managing and manipulating your supply to increase your price, except by dropping your supply still further and hence shrinking the sector. But that's just our collective view, or the view of a number of us. I don't know, Trung, if you want to expand on that.
Yeah, also I want to mention that, although I mentioned before that it's not going to be easy to predict, and a lot of analysts have mentioned a number of different oil prices for the next few years. But for us, if you think about, is there going to be another second wave or third wave? Are we going to a longer recovery? This will have a huge impact on the demand and supply. As we have seen so far, as soon as we get into a lockdown, we will get into the situation of whereby the demand is going to be reduced. If we're not careful and if we don't find the vaccine, flying will be quite significantly impacted, and I don't think we'll be at the rate we were back then. Roads on the cars would be okay, fine. However, it's still not going to be back to the same as we were pre-COVID. So I think still the demand and supply is for us perhaps still going to recover a little bit slower than perhaps some other analysts, and we will predict the fact that it'll be around about the $45 or $40 per barrel mark in the next year or so. Interestingly enough, once we hit that hump by 2022, perhaps we might see a spike going beyond what we're used to in the pre-COVID situation, because things may have gone back to normal and beyond. So unless we see a better recovery in the global pandemic, unless we see probably how to live with COVID, unless we see vaccines, the recovery may be a little bit slower than we hope it should be, and therefore demand and supply will be impacted. And this is the dilemma for us, that if the oil price remains the same as this, the return on investments for a typical project for oil and gas, there's a trade-off in our renewable space. And so if we continue on this path, does it mean the governments and other regulators, oil and gas companies will transition to accelerating renewables? If that's the case, what does that mean for the demand and supply of oil, and therefore the trajectory for a longer recovery for the oil price?
All right. Okay. Thank you, Trung. So there is still, we still have a time to discuss. There is still some of the question. So first is that next is from Pak Kolik Triananta. So actually there is several questions, but maybe I will take some of points already in. But is the first question is that with current IOG's company leaving Indonesia, how quick do you think that Indonesia government can attract them to reinvest? So, so maybe do you think that what is the most necessary things to do to attract some of the international oil and gas company back to Indonesia?
I think ultimately that question comes down to terms, the commercial terms that companies are being offered. And it's possible, I've not looked at recently at the terms that are being proposed. I've not done a comparison with other international, with West Africa, for example, or Guyana, or some of the other existing hot areas in exploration and production. It's possible that current terms in Indonesia have fallen below the global benchmark required to attract investment at a time when the tide is going out, so to speak, in investment terms. Maybe that needs to be recalibrated, maybe it needs to be adjusted. And of course, as I mentioned on my last slide, it's not just a question necessarily of adjusting the raw terms. Sometimes companies respond to not just basic returns, but volume opportunity. Perhaps there are some, perhaps low risk, but perhaps some high volume opportunities that they might respond to. And that's often something that, as in Iraq, for example, companies were accepting very poor terms in exchange for getting access to high volume opportunities, high volume fields. So there's a variety of different levers that could be pulled, I think. It's a question of looking at it in the round and comparing for Indonesia and comparing that with the international benchmarks.
Flo, if I can also just add there that with the PSC terms, gross splits, as Stephen had mentioned, we haven't done a full study on this, but there's a lot of articles and papers. People are studying this a number of years now since it was introduced back in 1718. I think it just needs also a bit of time for this to eventuate. But if you think about where we are today, not just here in Asia, but everywhere else around the world, we're seeing a streamlining of portfolio. People, like Stephen had mentioned, are rationalizing their assets. And so we might need to look at a bit broader than just the PSCs, but also think about the company situation and how could they survive in today's environment with the oil price the way it is, the COVID situation, and you'll see a trend of people leaving various assets, countries to reprioritize what they see as their vision or their strategy going forward. For Indonesia itself, this could be a double whammy here, whereby people have already started to look at leaving or is leaving, as well as some of the terms that need to be rethought through. A large thing that we did when we did the restructure for one of the Middle East nations was about transparency. And that was a big thing that we tried to understand, how to be more transparent to the contractors that wanted to come in. That was the biggest challenge for us to convince the regulators to allow. If you look at some of the best countries like Norway, they have it all in their website to understand what the terms and conditions are and how they will, come into the country, develop the oil and gas and exit, so forth. So all that, it needs to be thought through, as well as the conditions we're currently in, given the current crisis.
Absolutely. Yeah.
All right. Okay. Thank you, Trung. Thank you, Stephen. So we still have maybe about one more question. So this is a question from Joko Purwanto. Joko Purwanto, I think it's my friend Joko Purwanto. So to Mr. Rogers. So to Mr. Roger, what is the logic behind your expectation that the future of oil industry will be cleaner after this crisis? I see that government will relax their climate change and environment requirement to help the industry cut their capex and to recover. In other sector than oil industry, even we see that industry are built out without any green string attached. Thank you. So
the question is, will the response to COVID be for governments to relax their pressure to green the industry and encourage them to just invest in oil and gas and let loose the carbon constraints? Well, that's a possibility. And it's certainly true that politicians are fickle and in many cases morally irresponsible. I'm not taking a position here. I'm just suggesting that some cases what politicians believe in profoundly is changed overnight because of a different set of circumstances. And that is as it should be. After all, they're here, politicians are there to defend and protect the national interest at all times. I think, however, that in the minds of much, and this is a personal opinion as much as anything else, but I think that the progressive shift in public opinion in the developed world, and I'm only saying about the developed world, is such that people no longer make the connection between economic growth, economic development, and the prosperity of the oil and gas industries. In a sense, they see, and investors see, the two being completely decoupled. Trung showed a very nice slide which showed that oil and gas was progressively becoming irrelevant in the stock markets because oil and gas itself is becoming irrelevant in the economies of the developed markets. Growth, whether that's from new energy forms, expansion of wind and solar, expansion of energy management systems and batteries and electric cars, growth in those markets is seen as being connected with industry sectors that have nothing to do with oil and gas. And for that reason, my suspicion is that it's that we won't see big pressure to restart the oil and gas investment in many parts of the world. Now, in some industries, in some parts of the emerging world, of course, that will be completely different. And I don't have confidence that we, in China, for example, that we'll see any early curtailment of coal-fired generation. And the same may apply to diesel-fired generation in other markets as well. So I think we will see something of a divergence. But in the developed, in the G20 economies, my suspicion is that we will see a continued rapid change towards a renewable economy. And we see that reflected in the strategies of BP and Shell and Repsol, Total, who are all making rapid moves in that direction. Interestingly, of course, ExxonMobil, Oxy, a lot of the other big US players making no moves in that direction at all. So that's an argument that I'll have to play out on the stock market floor. John, do you have any other thoughts?
No, not much more than that. But the thing is, regulators, if you look at the trends, even in what I mentioned about scenario planning going for the future, there is a sign that they're pushing forward this because it will stimulate the economy. And, you know, the oil and gas sector is now well endowed with existing players that can, you know, bring about the economy by itself. But if we're looking at agreements across nations, Paris requirements and all that, the target is going to be there. How aggressive will they push? Depends on each nation. But we feel that this gives us a situation now to reskill ourselves, invigorate the national interest in renewables. Not to say that oil and gas will go away. We'll still need it. But I think that this is the chance for us now to think harder on government initiatives, and which they are coming through. Now, maybe in some nations that are not quite yet there in terms of development of technologies. But as solar, it's getting cheaper and cheaper to develop storage for batteries, so forth, we'll see adoption. And this will create additional jobs. And with additional jobs, you'll create stimulus into the economy. We'll recover a lot faster. So to us, it's going to be a win situation if regulators can try and force this. Yeah.
Okay. Yeah. Okay, so thanks, Trong and Stephen. There is one question to Trong, and maybe you can join to answer as well. So this is from Doni Oktarizon. So it's about the asking about the AI, artificial intelligence, that at the new normal era, oil and gas company to divide to, so the employees should do work from home. I mean, some of them also to work from office, but it must follow health protocol according to WHO directive. So what is the best artificial intelligence method that can be used to monitor, supervise productivity in the field?
Look, I won't be able to answer what is the best artificial intelligence algorithm or software to be able to use to monitor on the field. I think we're progressing there. We're not quite there just yet. We're working with a number of clients looking at automated drilling rigs, robotic drilling arms, and so forth. There's still a long way to go to look at unsupervised and beyond that, unsupervised AI. We're in a stage where people are getting used to, staying home to work, and if we have another pandemic, what would happen? So we have to anticipate this, and that's why I think the digital frontier is an interesting play. And if we're not already in there, we should. And if governments are not putting initiatives to develop capabilities in this area, I think we should. This actually shows us it's more necessary for us to be able to work out of harm's way, offshore rigs, onshore. But if we're now looking at remote, this will be a good opportunity for us to try it out. So I don't have the answer for the AI algorithm software, the best way it's situated. Like I said, we're working with a number of clients to look at how to deal with the current situation to work remotely. But we're still far away from going into the full automated and robotic type of drilling sense. So perhaps maybe after this, I could send an article or quick note to the participants on this question if you want.
Yeah, just to give an example on that point, we've recently worked for a large European international company operating or developing a very deep water oil and gas field, and it introduced. It wanted to cut its capital costs, reduce its the complexity of its subsea operations by simplifying its umbilicals and simplifying its templates. And to do this, rather than having umbilicals and improving the economics as a result, rather than having multiple umbilicals for chemicals, water, treatment, communications, it simply introduced some rather complex AI into the production operations management at the template in order to introduce chemicals on an iterative basis from the storage tank at the subsurface on the seabed, and that cut down diving, it cut down ROV activity, it greatly simplified operations, it greatly reduced capex. So a little bit of lateral thinking, new thinking, and the appropriate introduction of AI is definitely the way forward.
All right. We still have a time. There is a question from Agus Budi Purnomo, so I believe that you actually already highlighted in certain things, but this is my job to deliver some of questions to you. How to improve optimization in various aspects to keep upstream oil and gas production this year remaining at normal levels, even though world oil prices have plummeted due to the COVID-19 pandemic?
Sorry, Flo, what was the question again?
Okay, so the question is that how to improve optimization in various aspects to keep upstream oil and gas production this year remaining at normal level. So even though that the world oil prices is down and because of the COVID-19 pandemic.
Production optimization, of course, is something that should be pursued whether prices are high or low. Maximizing the flow from your wells and from your platforms is always the goal of any operations manager. And if there's even a 1% reduction in utilization or offset from peak deliverability, then that's a disaster. Because early oil and early cash is always so much better than late oil or late cash, because you've already invested in your well, you've already invested in your surface facilities, and that's the day job. How to do the day job, of course, is the job of all of us. It's about making sure that the right technologies were invested in and installed in the first place. It's about making sure that the team is properly trained. Maintenance is undergone in a timely manner, and here artificial intelligence and machine learning also have a role to play. And it's about making sure that there's timely and appropriate workovers and interventions in wells. But it's, yeah, more than anything else, it's about maintenance and understanding the reservoir, making sure there's perhaps a digital twin of your reservoir that can be engineered and tweaked with offline, off-site, in the same way that large automotive operators maintain a digital twin of their factories so that they can continuously tweak and shape and update certain aspects of their production line. The same should also be happening always with all production, oil and gas production operations. Takes some investment, of course. So I don't think this whole issue is extremely important, and I'm very grateful that it was brought up as a question. But I don't think that it's necessarily associated with COVID-19. What COVID-19 may do, of course, is to act as a stimulus to introduce some of these technologies and introduce some of these ways of working and ways of thinking in order to squeeze just this little bit more from the lemon, a little bit more juice from the fruit to improve the situation. But of course, squeezing the fruit works just as well when the prices are high as when they are low.
All right. Okay. Trump, do you want to add something?
No, I'm all good. Thanks. Thanks, Flo.
Okay. So I did my job, so there is no more question on my hands. So discussion is thank you to Trong and Stefan for a good discussion. So maybe if there is some of other question that for the moment is that you don't have in mind, and then after this webinar session is over, and then you have some of question in your mind, is feel free to send an email to us. Yeah, so and to mail, you can send an email to PPSDM, and then PPSDM can send an email to us, and then we will happily to answer all of the question. So
absolutely.
So thank you very much. So I return back to the Master of Ceremony, Ibu Santi. Thank you very much.
It's a great pleasure speaking with all of you.
Yeah.
Okay. Thank you, Bapak Florentinus, Mr. Rogers, and Mr. Gee. We highly hope our discussion today will be beneficial for all of us, especially in these uncertain times.
Thank you for all the participants both here in Zoom and those who stayed on YouTube channel PPSD Migas Official and Kementerian ESDM.
Dan tidak lupa juga kami informasikan untuk rekan migas baik di Zoom ataupun YouTube channel yang sudah mendaftar sebelumnya, link sertifikat webinar ini akan diinformasikan di media sosial PPSDM Migas. So, follow our social media ya. Dan silahkan mengisi kuesioner yang muncul di layar kaca Anda terlebih dahulu.
Oke, jadi rekan migas, jangan lupa untuk follow media sosial PPSDM Migas, karena PPSDM Migas banyak banget program-program yang menarik, yang pasti kalian tidak ingin ketinggalan.
Iya, berbagai program workshop, training, certification, dan lain-lain termasuk webinar ini semua kami publikasikan di sosial media kami. Jangan lupa follow ya. Dan silahkan mengisi polling layanan webinar PPSDM Migas.
Well, we still don't know how long this pandemic will last, but we need to keep our spirit up and work together as never before to face this storm.
Keep healthy, stay safe, and be blessed. Once again, thank you for your participation. I'm Santi.
Dan saya Nova, pamit undur diri. Sampai bertemu di program PPSDM Migas selanjutnya.
Wassalamualaikum warahmatullahi wabarakatuh. Thank you, Mr. Rogers. Thank you, Mr. Gee. Thank you, Bapak Florentinus.
Thank you.
Okay, sama-sama. Thank you.
Hope we will have cooperation in the near future.
Sure. Yeah.
Thank you.